What's up guys, my name is Brock Irwin. I'm a loan officer in Dallas, Fort Worth. Today I'm out here golfing with the guy who does all of my media. So we thought we'd take the opportunity to film a video on the back nine here just to debunk the 9 mortgage myths that we've been talking about. So watch along as we play these 9 holes and hopefully the scores are a little bit better than we had on the front 9. Follow along for the 9 mortgage myths, and every hole that we go along, I'll be debunking each one of them. So let's go to the cart and see where this drive went. So mortgage myth number 1 is everybody still thinks that you need 20% down to buy a house, but there have been numerous times this year that I've helped first-time home buyers get into a house with $0 out of pocket. It's completely changed over how many programs that there are now. Even the average first-time home buyer is only putting 3 to 5% down. So if your parents are telling you to wait to buy your first house until you've saved up 20%, or they think they have to gift you a full 20% in order to qualify, it's completely wrong. And let's have a conversation and we can talk through all the programs that are available, because you don't need to save up that much money. You can have $10,000, $15,000, or even as little as 0 with any first-time home buyer program out there. So have a conversation before waiting too long and just wasting your money on rent. So mortgage myth number 2 is when you're qualifying to get a house, it's different than when you're qualifying to get rent in an apartment. When you're getting an apartment, they typically make sure you're making 3 times whatever that monthly rent is. But with a mortgage, it's actually more flexible. So we can actually go up to 50%, sometimes even higher, for what you can qualify for on a monthly payment for a mortgage. When getting a mortgage, it's just as black and white as qualifying for that next apartment. So we're gonna look at your gross income before taxes and then take 50% of that number. And then once we have that number, we'll subtract out any debts that you have. Whatever is left over, that's what you qualify for a mortgage. So it's way more simple than making 3 times whatever your rent is. It's gonna be 50% of your gross income minus your expenses, and that's what you qualify for a mortgage. So most people think your credit has to be perfect when you're buying a house. Think of the 800 credit scores or the high 700s, but that's not really the case. So there's actually loan programs that go as low as 500, but here's gonna be an idea of some of the things that you can look out for when you're looking to qualify for a house. What you need to focus on with your credit when you're planning to buy a house is specifically your credit cards. So if you have a credit card with a $5,000 limit, make sure that every single month when that reports to the credit bureau, so when your statement comes out, you're keeping it less than 30% of that $5,000 limit. This is going to help your credit score continue to go up. But if you have those $2,500, $3,000 credit card statements, then that's actually going to hurt your credit score month over month. It may not disqualify you from getting a mortgage, but it's going to hurt your interest rate. So make sure to focus on your credit cards if you're preparing to buy a house in the next 6 to 12 months. Most people don't know the difference between a pre-approval and a pre-qualification. So I'll walk you through what each one means and why one of them isn't quite going to cut it. So a lot of people think that just because the Fed cut interest rates, it's time for them to refinance. And this could be the case for you, but here's a breakdown of when the right time to refinance might actually be. So pre-qualification isn't really verifying anything. It's taking you on your word, which we're not saying that you're a liar, but the way that an underwriter reviews documents is different than the way that you might perceive your income. Take the extra step, get everything verified with your lender to get a full pre-approval. This way, when you make an offer on the property that you love, you're actually going to get this offer accepted, and it's going to be able to be something that the lender can follow through with. So take the extra step, then the mortgage process is going to be completely stress-free. Hole number 5, myth number 5, when is the right time to refinance? So there isn't a perfect time to refinance. So here's the rule of thumb that I like to apply to just about every client, and that's dropping your interest rate by at least 1%. You're going to get called to refinance by everybody under the sun. You'll have call centers calling you nonstop after the Fed cuts interest rates, but here's the thing. You're going to want to make sure that you have enough monthly savings to break even on the cost of what a refinance is. Now, every lender is going to tell you that you're going to refinance for free. That's great, but they only control the lender fees. So you want to look at the overall cost of a refinance and make sure that you're breaking even within a couple years, and that's going to be the true teller if it's the right time for you to refinance. Getting a mortgage doesn't have to be stressful, kind of like my tee shot here that ended up in the fairway bunker. When you want to get a mortgage, you should spend time trying to get prepared. Just like I could have hit more balls at the range, so hopefully I didn't end up in this situation. So I just got up and down for par, and the only reason I was able to do that is because I've prepped and practiced that shot time after time. So when you're preparing to get a mortgage, you need to have the conversations, prepare ahead of time. That way, when you get under contract and things seem to be going crazy, you've already prepared and you already know the game plan that's going to get you to the closing table. Just wrapped up the 7th hole, so this is myth number 7. If you got denied for getting a mortgage, it's not the end of the day and you don't have to give up. Every lender doesn't have the same programs, and you might be able to qualify somewhere else. So a lot of banks are actually limited on the amount of programs that they have. So if you're self-employed, we've got something for you, like a bank statement loan or a P&L loan. If you're new on a job, we have different types of programs as a broker that can help get you approved when every other bank has told you no. So if you have been turned down, this is not the end of the world. There are plenty other options out there. So find a resource, and you can shoot me a DM if you want help on finding an option for yourself. Mortgage myth number 8, every bank has one interest rate. When you're trying to get qualify for getting a car loan. Most people just put in their information and get spit out an interest rate. That's not the case for mortgages, and here's how it works. So interest rates when getting a mortgage is gonna be more like a spectrum that you're able to pick. So every bank is gonna have a range of interest rates, but there's gonna be a different cost of each given interest rate. When your loan officer comes in and they quote you an interest rate, you actually have the option to get something lower or get something higher. So ask your loan officer what is the range of interest rates that you're gonna be able to take advantage of, and see if one works better than the other that they quoted you initially. Mortgage myth number 9, and we're on the 9th hole on the back 9, and the biggest thing that I hear people say is they have to be a first-time home buyer in order to get down payment assistance, and that's totally not true. For the longest time, people have had to be first-time home buyers to take advantage of grants and down payment assistance programs directly through banks, but that's no longer the case. Anybody across the board, and really at any income level, can take advantage of these programs. Now, we wanna make sure this is right for you, so have the conversation early and make sure that your payment and your cash to close is gonna be something that fits your budget, and I guarantee there's a program out there for you. So that's my 9 holes, and those are the 9 myths, and I hope by the end of watching this video, all of those myths were debunked for you. And thankfully, this back 9 came out a little bit more favorable for me, and finished up on a good note. And subscribe if you like this content and you want to see more mortgage myths or mortgage tips that can help you on your home buying journey.